Hello, it's Mr. Intermarket Analysis bringing the review of the Aussie-USD for the week ahead. Aussie-USD, a tricky one, okay. Given the fact that it's obviously related to commodities, it's very sensitive to risk on, risk off, and obviously global demand, okay. Now, the pair itself, okay, let's discuss the fundamentals for the week ahead, beginning from 4th of November 2013. Okay, so the arguments for the Aussie to go higher. Arguments are, first of all, stronger Chinese data. That was Chinese PMI. The Chinese PMI data, HSBC, and the official government one. Okay, slightly came in better than expected, in line. So that certainly puts a support under Aussie. Adding the fact that the PPI inflation data came out higher than expected. That again gives an argument to raise rates, therefore obviously higher Aussie. Adding the fact that the housing data in Australia was better than expected, which again caused a short squeeze midweek, and that again supports the Aussie on the upside. Okay. Also argument that the commodities are now into support, gold, oil, and gold, oil, and copper as well. Potential support zones again, if they're in support, therefore the Aussie will go higher. Given the fact that you have got talk about QE in Europe, that should inflate asset prices in Europe, therefore increases demand for commodities, inflates commodities. Given the fact that you've got more Kool-Aid, again that puts a support zone into the Aussie, or certainly supports the Aussie. Okay, and given the fact that the euro is now going to be under currency debauchery, like the US dollar, like the Japanese yen, then the Aussie may well be a safe haven bid from that perspective, given the fact that it will have capital accumulation. It's probably the only currency that doesn't have any external stimuli or manipulation via central banks. Okay, so that should certainly give the argument for the Aussie to go higher. Now let's discuss the arguments against the Aussie. Mr. Stevens last week talked the Aussie down, claiming that it wasn't in line with fundamentals or reality. Let's be honest, which instrument is in this day and age, given the fact that you've got juiced up markets via QE and central banks wanting to manipulate the markets higher, especially given the governments want to win votes in the next election, etc., etc. Anyway, so Mr. Stevens, obviously he's the individual, or any policy, any government policy individual, anybody who wants to, especially related to the government, that wants to talk the Aussie down, given the fact that probably get hurt in terms of exports and their current account balance, etc., etc. Adding the fact that the Europeans are now doing QE and the Australians may well feel left out, so they may talk the currency down by signalling further rate cuts, but they can't do that now either, given the fact that housing data was strong, inflation data is higher than expected. They have a mandate, especially with regards to inflation, to control the currency, and the fact that the Chinese data was higher or probably in line than expected. That again puts a floor in the Aussie as well. Okay, so it's very hard to argue based on fundamentals, to argue for the Aussie to go lower. You can certainly argue, okay, if they are going to keep tapering open in December, then the US dollar will catch a bid, therefore forcing the Aussie down. You can also argue that the economic data as of recently has been very weak, especially in the German zone, Germany and Eurozone, and in the US, therefore. Hence the reason why oil has sold off significantly. Okay, so but again, the oil sell-off has been overdone, should I say, and it is into potential supports. Therefore, that technically supports the argument for the Aussie to go higher. Okay, so that's a summary there, folks. Let's go into the technicals now. Okay, so technicals of the Aussie-USD weekly chart. Let's start with that. Okay, so we initially had previous support equals resistance. Obviously, the Aussie paced that. You had the golden, or should I say, death cross there, where the 50 MA goes below the 200 MA. Therefore, this is technically should be a lower high, shall we say, for a move down, as it's held at 50%. But given the fact that the Chinese data is stronger than expected, PPI inflation data higher than expected, housing data better than expected, it's very hard to see this Aussie continue to sell off. Okay, so unless there's some geopolitical type event which causes the US dollar to catch a bid, and obviously Aussie being the safe haven could get sold off quite considerably. So that's really the only way I can see the Aussie selling off at present. Okay, now let's go to our telly chart. Okay, even though technicals are saying down on the weekly, Still on the daily chart, we have a Fibonacci retracement support around the 61% level. Provided the Aussie stays above the 75% Fib retrace, which according to my system is around the 9400, provided we stay above the 9400, then we will continue to go higher. If we do fail the 9400 level, then watch the Aussie fall all the way back down to gap fill, which is 9240. Okay, so that's an interesting scenario there. So let's go to our 4-hour chart. Okay, 4-hour chart here. This is the gap level that the market's opened up and obviously shot higher and moved higher. So that's a level that's quite significant from my perspective, and that's exactly where we are now. We have a downward sloping contracting wedge. We have a bearish channel which is literally overdone from my perspective now, and we are having you have a bottoming tail there, a bit of a bottoming tail here, another bottoming tail here, and although you can argue it's a bear flag and we've got lower lows and lower highs, this lower low, the lower lows here are not as significant as the lower lows and lower highs here. So that indicates that there is support, mainly due to the factors I've already explained: Chinese data, higher PPI, stronger housing data. Okay, and adding the fact that the Europeans are now doing QE, that should again help demand for commodities and inflate commodity prices higher. And given the fact that commodities are now into support, therefore a thrust higher is expected. Hence the reason why the Aussie-USD should go higher based on my analysis, and that's exactly the trade that I'm in. I am already long and looking for a thrust higher. Okay, now 60-minute chart. Let's see if we can look at that. Okay, 60-minute chart. Yep, downward sloping contracting wedge pattern again. We are in the lower channel support. You've got a bottoming tail again here. Look for a thrust higher at the 9470 level, potentially back higher to these highs at 9520, and then you have a 200 MA around the 0.96 level. Okay, let's go to a 10-minute chart. 10-minute chart. Well, I've already obviously done some analysis on this. We have an inverted head and shoulders pattern here. The neckline you're looking at around 9420. The head is 9420. The neckline is 9445. So 25-point projection. That should take us to 9470 again, which is 200 MA. And then obviously you have to reassess from there, given the fact that we did or we are testing the potential here for a H&S type scenario here. Really we didn't really do anything, and obviously we've moved lower. So again we retest the neckline, or previous resistance, previous support equals resistance, and the 200 MA as well again. So watch out for the 9470 level above. Expect IHS formation certainly to play out on Monday, going a thrust higher, especially given the fact that the FTSE futures are higher, so therefore the FTSE and Aussie generally tend to be positively correlated, and the fact that commodities are into support. So that's your understanding of the Aussie. From my perspective, still based on fundamentals, certainly bullish. Based on technicals, an argument can be made on either side at present. Okay, given the fact that the weekly and daily charts are looking quite bearish at present. Okay, but fundamentals generally always trump the technicals. Okay, and it should move in line, especially given the fact that a few Fed members did come out on a Friday evening and talk up QE. Okay, saying that December wasn't a possibility, QE is needed, etc., etc. A few of those dimwits coming out again talking about QE should certainly send the Aussie-USD even higher. Okay, so let's just quickly look at the commodity, which I explained are into support. So you've had quite a flush here now with regards to the oil. Okay, so certainly, although it has broken almost every support level so far, the IHS target has been hit. So from my perspective, wherever IHS gets hit, you certainly look for a lot of potential short squeeze higher, and that's exactly what I'm looking for come Monday. So obviously previous resistance here equals support. Okay, so certainly a level to watch here, 94 level, certainly look for a thrust higher. Okay, with regards to oil, let's look at copper. Copper is a symmetrical wedge pattern. Let me just draw this one correctly at the moment. Okay, looking for a thrust higher. Again, given this fact that Chinese data, remember I explained it's stronger than expected. Boom, off we go. Your potential here for an inverted head and shoulders pattern. There's your head, there's your right shoulder, and off we go. So Chinese data stronger than expected. Certainly look for a thrust higher here as well. Adding the fact that you've got QE now as well. Adding the fact that you've got QE from Eurozone. Obviously looking for a thrust higher again. Okay, so for copper, let's quickly have a look at the chart of gold. Gold chart, interesting again. Seems to be getting crushed ever since the FOMC mentioned obviously tapering situation. Okay, so it's all about QE, baby, as I say. Okay, so basically it's not looking as strong as before. Certainly can't argue that. But having said that, you do have a potential here for IHS formation, especially remember given the fact that if we do have deflation in the Eurozone and the ECB is concerned about deflation, then the only thing that they can do is print money. If you print money, what happens to gold? As we all know, up it goes. Okay, so certainly look for a thrust higher on gold from my perspective. Minimum you're looking at around this 1420 level. So I'm definitely a gold bull. I don't really believe in all the, well, not noise, but the arguments for it to go lower are pretty feeble. I can't really see the Fed tapering in December, therefore looking for a, even though the Fed wants to take some hot air out of the market, I can't see them tapering, therefore that should certainly look to propel higher from my perspective, especially after this gap was closed. So that gap's closed now, so there's no real force pushing gold down. Given the fact that obviously you've got the US debt ceiling again re-emerging in January early next year, that's certainly helping the good gold price. The fact that you've got inflation in Australia, that again should help the gold price. The fact that you've got inflation data in the US was actually higher than expected as well, but obviously the deflation has been exported elsewhere. Out of Japan, it's been exported to Europe. So if Europe does more QE now, that again should help the gold prices to move higher, especially given Mr. Nowotny's comments. So again, the only thing I can see from my perspective is that the Aussie-USD wants to go higher, given that commodities are into support. Okay. Right, I'll wrap it up there, folks. Always remember, risk on, risk off, wax on, wax off. Goodbye now.